Hello everyone, I hope you guys are having a wonderful day as per usual, and let's get right into it here. We're going to be doing a little bit more individual names today, because I think we had a lot of success in the last YouTube video. We got over 1,300 views, and we're going to be taking a look at some more stocks today. So it might be a little bit of a longer video, but let's get into it here. So we'll start off with the SPY. We're going to cover the indices today. So again, we did not get this C leg here. It would have been a picture perfect move. But again, that's the thing with the Elliott wave. Sometimes things can truncate and they don't play out as we want. So let's just get rid of this ABC count for now. And we'll put this as a 1-2. So this was our small 2 wave. And if we continue up, then we should be in our third wave here. And this should be a 3 of 3 move. So right now we got our wave 1, 2, and then we're now in a 3 of 3, and then we'll do a 4 and a 5, right? Once we get to probably 5-10, that's probably when the move is going to finish, and then we'll probably get a pause there. We'll start to retrace, and then we'll go from there. But for the time being, this should be the count, and it's going well so far. We had another update, 21 basis points. Not that much on the SPY, but as you guys can probably tell, the small caps were screaming higher today. And we'll take a look at the triple Qs as well. A very similar situation, essentially the exact same count as the S&P. So if you're looking at the S&P count, you can look at the triple Q count, and it's going to be the exact same thing. But I'll probably draw it out one day for you guys, and I'll do all the same counts, and I'll actually do price target calculations for the triple Qs, which is the NASDAQ. And let's take a look at the IWM today. And as you guys can probably tell, we had a massive update today in the IWM. I actually took some profits on my IWM position. I had a small long on the Russell 2000, closed that off, and I'm actually looking forward to getting into a long on natural gas. And I'll talk about that in just a minute, but we'll move on. We'll circle back to that in just a few moments. So right now, the IWM looks like it's going to be going in its final wave up here. Something like this, and then you're going to be finishing up in a fifth wave. So right now we're in wave 1. We're just starting it of the fifth wave, so something like this, right? So we're going to do something like that, and that's basically my primary account for the IWM. Now, once we erase bearish divergence, then you're going to be in your fifth wave. But yeah, that's basically it. Not too much to add. A very nice update. The reason you are probably seeing so much pumping right now in the IWM is you're probably seeing some rotation coming out of the mega caps. If you guys have been following these big names like AMD, Nvidia, these ones are the mega caps, and they're pretty much like tapped out here. They kind of need some breathing room. They need to relax, and you're going to see some profit taking probably coming back in a wave 4. And then you're going to see them, the funds are going to rotate into more risky things, small caps, right? Smaller stocks, and then that's basically what's going to happen. And then you're going to see the IWM pump back up as well. Again, don't get me wrong, I'm very bearish on the market, but this is the count that we're seeing, and people are asking, how can the market keep pumping up? You're essentially getting a very big short squeeze, and by taking out the previous all-time high, you took out a lot of stops, and a lot of stops were triggered, and people who were holding shorts right above this level are now closing them out, which is causing buying. And then on top of that, you have regular people FOMOing into the move that they missed. So you're going to see just an exuberant amount of pumping happening. Eventually, it will come to an end, and then we'll reverse this entire move. We'll fill all these gaps, and we'll come back all the way down. We'll probably take out the October pivot as the economic data, ensues, and it's going to be inevitable that it's going to end terribly. But for the time being, things are going good, so let's enjoy them as they go. Let's take a look at some individual names here. Okay, we'll start off with ROKU, as we always do. So right now, ROKU looks like it did not hit our buy area, like the same thing as the SPY. And for the time being, it should be starting its first wave 2. First confirmation of the move is going to be us taking out the pivot around $95. If we are able to do that, then you're going to see a continued and sustained rally in ROKU, which should bring us to a price target of 140 to 160. So that's basically it. We'll move on here. We'll actually take a look at I want to take a look at Starbucks. Sorry, Starbucks. I have a long list to do today. Take a look at Starbucks. So Starbucks is doing very good. It's actually retracing and retesting the breakout. So we'll have to see if that can hold. If it does come back down to 92, then that's still fine in my opinion, as long as you stay in the buy area. We basically like kind of invalidated it, but for the time being, it's still holding. And if we do come back up, then your target's at 102. Nothing new there. Same old situation on Starbucks. A little bit of a slow mover. It's not too crazy. We'll take a look at Tesla. So Tesla is still in the buy area. I had another bit of a down day today. We are still seeing we actually have a bottom confirmation on Market Cipher for this one, and this is a trade that I've taken. And we're actually going to see if this plays out nicely into earnings. Earnings are coming up. The estimate is 25 billion. The previous one was 24. And then, they have a 73 earnings per share. That was the estimate here. Estimate was 72. So we'll have to see how they do. Last earnings, they didn't do too well, and they actually had a pretty big down day, but they recovered the move. Now we're going to have to see if they made up for that move. But just looking at the Tesla on Wave Edge, we actually see on the smaller time frames, like the 4-hour, which I do like, we're actually seeing some significant buying here. So they are accumulating positions in Tesla, and on the 1-hour, you're actually getting even more, right? So usually the 1-hour, the 4-hour, and daily is what I like to use and check for potential long positions on stocks. If you're going for day trades, then yeah, you can look at the 5-minute and stuff like that. You can see intraday hedge, like funds starting to accumulate and buy a certain position in the stock, and then riding out the move, and then they'll exit before the close. Usually the exit comes on the close right here. So on Friday at the close, they were exiting their positions, and that's how it goes. Anyways, we'll continue. So that's basically it. This is my count for Tesla. This is what I expect for the stock to do, but it doesn't mean it's going to happen. Let's take a look at actually Alibaba. Someone made a request for us to take a look at Alibaba. I actually haven't made a count here. Before I had done some analysis on Alibaba for someone before, and we were looking for this head and shoulders pattern to play out, which it didn't, obviously. And it is technically, I mean, if you're really forcing it, you can make the case that this is a really big right shoulder, which I don't like, because I would like to see something a little bit more symmetrical. But inverse head and shoulders usually appear at the bottom, a bottom of a big move, or a cycle, I should say. As you guys can probably tell, we've had a huge move down in Alibaba since 2020, and it's gone down 77%. And I mean, it's technically, it's like the Chinese version of Amazon. So there's going to be a lot of demand there. I don't follow any of the fundamentals, but I know the Chinese market right now is not doing so hot. Like the if you take a look at the Hang Seng Index, we actually had a nice little update today in Hang Seng. But it's been getting hammered these last couple of weeks. If you've been following the market, it's down in the last 3 weeks. It's down over 8%, right? So obviously these Chinese stocks are getting impacted in a negative way. So we've come back to Alibaba. Would I like a long position right now? We could run it through Wave Edge and Market Cipher very quickly. And we'll take a look at it. Let me just run it through here. Take a look at the daily time frames, see what we got going on, and we'll actually take a look at the larger time frames too. So the weeklies, there is a yellow cross right here from the previous week, which is a signal of manipulation that they are pushing the price lower than it should go. Monthly time frame, not looking that great, to be honest. Daily time frame, you actually have a potential, long coming up here. If you can confirm with a green dot, you're getting into some pretty extreme oversold conditions here. Looking at the daily, I think we've been oversold for a while. You have bullish divergence, which is a good thing for a long position. Yeah, and then I have the bottom of the range, right? I've got these two pivots here from 59. At this level, maybe you could try and look for a nice little long position there. If we don't get that, then if we let's say it doesn't reach this level and it's you want a long now, then you set your stop below this pivot, right? Because if you go below this level, maybe you're gonna start to enter price discovery towards the downside, right? And then it could really start into panic selling. You don't want to hold positions for that long. But yeah, this is not financial advice. Do whatever you want and do what you think is gonna be the best outcome for you. Looking at wave edge, we actually have some significant buying coming here at the current levels. So yeah, maybe I'll chance along myself once we get to if we do get a little bit lower, maybe if we can tag maybe like a $65, I'd be interested. But I do like it at current levels. It's not a bad buy. Let's move on. Let's take a look here at the dollar. We'll take a look at natural gas. Actually, let's take a look at our commodities. We haven't covered oil yet. Oil had a nice update today. It was up. Let me just do a measured move here. Let me just measure how much we're up. We're up about 1.6%. Nice little move on oil. It retested $75 and it did get rejected from there. We're going to have to see if we get follow through. If we get follow through and we break above 76 and we take out this pivot, to me there's a possibility. Excuse me, I'm burping there. There's a possibility that we may not go down to the 55 to $45 level. It may come later on, but it might not come right away. And that's because if we do that, then you could have finished the fifth wave here and you may not technically go lower, because if that's the case, then you've technically met the minimum requirements for the fifth wave to be finished. But we'll take it day by day and we'll see how everything goes. Looking at natural gas has been getting hammered these last couple of days, especially with that report coming out last week. Nat gas inventories were had more, or sorry, they used less than expected, so that's probably why it's down 15%. So it's known to be as the widowmaker. Currently, it's forming a base at $2.36. I don't know if that's gonna hold, but when we look at the daily time frame, we'll just head over here very quickly to natural gas on wave edge. Looking at nat gas on the 4-hour, you are getting a little bit of buying coming in here. Maybe we got some longs, some funds trying to open some longs here. But yeah, overall, it's been getting pummeled. I still do like nat gas in the long run for a long position. Just looking at where it's come from, where it's been. I mean, just look at it. You're at 40-year lows, right? So this tells you everything you need to know. You have monthly confirmations as well on other indicators. So this is just a long-term hold for me. But if you're looking for a short-term trade, you can chance one here, but set your stop tight, very tight stop, especially with this commodity. It's very volatile. Let's take a look at the dollar. The dollar actually had a little bit of an update today. It was, or sorry, oh yeah, it's today. This is still today's candle. 32 minutes left. So yeah, I had a nice little update today. It could technically still extend the B wave, right? I wanted to see this, the 50% retrace, or at least even the 618 potentially being tagged. And if that were to, come to fruition, then you would see the markets pull back a little bit, and maybe our first wave is finished in terms of a wave 3, which would I technically not like at all, because I would like this, or it could do something like this as well. It could do something where you do your first wave 1, 2, 3, 4, and 5, right, out of a wave 3, and then a larger pattern and a larger pattern, right? But then I wouldn't like that at all for a bigger move. What I would want to see is this continue up, which means the dollar should technically continue to go down. All right, and let's take a look at the 20-year yield and actually TMF. So TMF and the 20-year yield are essentially the same thing. If you guys trade the 20-year Treasury bond, then you probably know what the TMF is. The TMF or sorry, TMV and TMF. So TMF, I'm pretty sure someone asked me to take a look at TMF. Let me just, someone asked me to take a look at TMF. So TMF here is the long position, 3 times leverage of the 20-year bond of TLT basically. So when the yields go down, this goes up, and when the yields go up, this goes down. So as you guys can probably tell, when the yields were going up significantly, this kept going down and down and down and down. And now we can take a look at TMV. But yeah, actually no, I'll keep going on TMF. So for TMF, if this is the low and the low is in, then we're going to be doing a whole new cycle higher, something like this. And what you want to be looking for is a potential long position on TMF, which you actually got confirmation of today, which means that the yields should continue to decline here, which means that the B wave is in, and you want to be looking for lower levels, possibly 3.7%, which is a decline of about 15% in the yields at the moment. And then that would cause this to go up potentially even more, 45 to 50%, right? Looking at the TLT, oh, that's not it. Looking at the TLT, you got the same confirmation, which means you should go up, right, from here, from current levels. So this is the wave 2 could be in, and you could be getting a larger cycle higher in a wave 3, which is actually quite a nice position to be in. This might be a very nice long position, right? 67% upside. I mean, there's a lot of upside for TMF, but there could be a lot of downside as well. You know, this is a very data-driven market. Economic news can change things very rapidly, right? Bad things happening to the economy, or good things happening, or, you know, data coming stronger than expected can shift things very quickly. But yeah, that's basically it. And then I'll wrap it up with Apple we'll take a look at Apple, because Apple actually got over my sell area today once again. And whoops, I did not mean to do that. Let me just put this back here. But yeah, so Apple getting over this level here. I no longer like the short. I already didn't like the short too much after we blew past it. So to me, Apple could be continuing higher as well with the market, and we have to look for a short position later, and we have to redraw our account. But for the time being, this played out quite well. Looking at the shorter time frames, we were looking for an ABC pattern correction higher. Could the wave 2 be extending? Yeah, it could, but we'll do a bit of a fib retrace here as well to see where our targets could be. So you get your B here. And look at that. You almost tagged the 786, which is basically the 75% retrace for this leg down. I usually like to look for the 618, and then, you know, we kind of gapped over it today. So your next level to look at was the 786, which we almost got to. If you take this pivot out, which by the way we very well could, because the stochastics are resetting already so quickly, you're burning that stochastic RSI, and you're just getting ready to go higher. So I mean, this can extend higher and higher and higher. I'm not saying to buy anything. I know there's lots of problems in this market, and you really want to be frugal and cautious with your investments at the moment. You don't want to go gung-ho, crazy buying all sorts of things, but do what's best for your portfolio. Let's move on here, and we'll wrap it up. Probably taking a look at I think we covered everything. Maybe we'll take a look at precious metals. I think precious metals need a larger correction. I think precious metals could very easily come back down to the $1,900 area. You know, there's been a lot of FOMO buying in gold, and especially gold stocks. And gold stocks are, trust me, they are not doing well. Like, take a look at AG, right, which is First Majestics. This thing got hammered down the other day. I believe Fortuna Silver also got hammered down. We'll just get over here. Fortuna Silver had a 12% down day as well. And this thing, I mean, all of these stocks are just completely in the toilet at the moment. No one's really looking at them, which is usually what you want to, usually what you want for a period of good accumulation. But it's not going too good right now. Right? It's not going too good. And that's why I think when all these people FOMO'd into the precious metals with that big rally in gold, I think we need to shake them out and come back to the $1,900 area before we continue higher. Same thing for silver. Silver, you know, there's so much upside potential in silver that you kind of need to shake out the weak hands And if it does come lower, like I said, I would love to see silver at $19 once more. But you know, we may not get that. There's no guarantee that we could get silver down to these levels here at 19 bucks. I mean, I would load up the truck if we would get there, but again, there's no guarantee. So you just gotta be patient with these commodities, precious metals. If you're looking for something to trade, there's some much more volatile ones like natural gas and oil. Silver is definitely more volatile than gold, but sometimes it has its days where it does almost nothing. All right, that's basically it. You guys know the game plan is essentially, you know, let the market ride itself out. Don't try. I know some people were saying, you know, puts. It's time to get into puts. Not yet, in my opinion. I think it's time to let the FOMO hit people and then just let them long. Everything like Nvidia at all-time highs, Microsoft at all-time highs. They want to get in. They want Nvidia at $1,000 a share. Let them, you know, think that maybe we can get there. Who knows, right? I don't know how far this delusion can go. And I say delusion because I think that people are ignoring a lot of problems that are unraveling in the economy that we're not really paying attention to, like bankruptcies are near record highs right now, and people are like, that doesn't matter, you know. Things like that. Like smaller companies are suffering by huge amounts. Inflation is trying to, you know, inflation could very well come back. Looking at the economic data, when you look at inflation, let's just head over here. Yeah, and then the unemployment claims are rising as well. We're at what are we at now? 6.26 million unemployed. We were a little bit higher. We're like 200,000 higher in October, but I think this data is just from December. We don't have the one from January yet. Looking at not M2. What was I looking at here? Inflation rate. So you can see inflation getting inflation from 3% all the way down to 2%, which is their target, is much harder than getting inflation down from 9 to 3. That's the easy part because it's just so overextended. There's just so much, you know, excess in the economy that if you tighten just a little bit, it brings the inflation down very rapidly. But what you're doing is kind of like double bottoming in the inflation, and you could very well continue up. And that's not what we want to see at all, because the Fed is planning, and the market is not just the Fed is planning on cutting rates, but the market has priced in so many rate cuts that if you don't cut rates and you don't cut rates and you start to raise again, that's going to undo everything that the market just did. This entire rally that we've gotten is all based on the fact that the Fed has pivoted and they're cutting rates. So that would into a huge disaster. So I hope they don't do that, but there's no guarantee. Sorry, I have an inflation chart right here. So with it's also lined up with the Fed funds rate, I believe. So let's just see what they're gonna do, right? So sometimes the inflation's very high, right, and then they start to raise too late, right? Look, they let inflation get to 8% before they start to raise rates, right? And by then you know, inflation start to come back down. Now inflation is going to start to come back up, and they're going to start to cut rates, which is just completely the wrong thing to do. We could very well get into some bad times if that starts to happen. Anyways, hopefully you guys enjoy this video, and I'll catch you guys on tomorrow's update. Peace.